Thank you for joining me for a quick look at some market information that's in the news. Many investors will be considering should they buy Lyft or Uber. Both companies will be coming to the market with initial public offerings, and some investors may say they only have enough funds to buy one. Which one should it be? Well, the real question should be, should they even be buying an IPO? Now, although both of these companies are valued in the billions of dollars, neither one is profitable. The IPO is exciting, but does that mean it's a good investment? This will be the first opportunity for individuals to own shares in these exciting companies. But the IPO might not be designed to benefit individual investors. When a company like Uber or Lyft is getting started, they receive funding from large investors, venture capital firms in many cases. And these firms are well informed about the industries they actively fund. So they're kind of in a position to pick winners and losers in the industry, yet they still have a low win rate. Venture capital funds and private equity funds often count on just a few big deals delivering the bulk of their profits, knowing they'll have a number of deals that break even or lose money. Even though they are at risk, the information in this deal is asymmetric, meaning the early investors know a great deal about the company. Their goal is to maximize their long-term returns. And they have decided that now the IPO represents a good time to decrease their exposure to this company. We as individuals are being asked to take the other side of that trade. We're almost certain the seller knows more about the company than we do. So we have to ask, is it a good deal to buy when a smart investor is desperately trying to sell? Typically, the answer is it depends. Now, the IPO will be allocated the night before. Investment bankers will give some shares to very large investors like hedge funds who do a lot of business with them. Those funds will turn around and offer to sell their shares the next morning when the market opens. This is where the IPO gets the excitement. It'll take hours to clear the trades. And generally, we see a price bump in that first trade with lower trading throughout the day. Overall, a study that looked at more than 8,000 IPOs since 1980 found that in the first 5 days of trading, IPOs gained almost 18%. So it could be a good short-term trade. Over the next 3 years, they provide an average total return of 22%. Now remember, 18% in 5 days, 22% in 3 years. So the bulk of the gains come within the first week. On average, IPOs underperform the broad stock market, and this was a study that looked at nearly 40 years of data. So IPOs are a lot of excitement. First week is a big gain, but it's a trading gain. It might not be the best long-term view. Let's take a look at some IPOs from the recent past. Here's Snapchat at the top, Twitter at the bottom. Snapchat has basically plunged since the IPO. This chart shows the entire history of trading. Same thing with Twitter, where we saw a pop in the first few days, and then we saw a steep decline. IPO investors are still, so investors who bought in the early days of the offering still show a loss 5 years later. Sometimes IPOs work well. This is Google. Google's process was a little bit different. It was a reverse Dutch auction rather than a traditional IPO. It was designed to benefit individual investors, and it worked. Now, the traditional IPO process does disadvantage small investors. It's not going to be like Google's process, so that's going to be important to remember. History tells us IPOs could be good short-term trades. Is Lyft a buy right out of the gate? If you want to take a short-term position in it, it could be. If you want to take a long-term position in Lyft, you should consider waiting because history says you're going to get a better buying opportunity in the weeks after the IPO. Same's going to be true for Uber and all of the other high-profile IPOs that you see this coming year. So IPOs in general, high risk, potentially low long-term returns. Might be an investment that's better to look at and pass on than jump into in all the excitement. Thanks for joining me for this look at IPOs.